Welcome back, dear investors. We've got an exciting one for you today. Prepare to delve deep into the financial labyrinth of AT&T, the telecommunications titan that has seen its fair share of ups and downs. We're breaking down the numbers, uncovering trends, and revealing some shocking revelations. Buckle up, because this ride is about to get wild. Let's start with the PE ratios, shall we? The trailing 12 months P might be in hiding due to negative earnings, but don't lose hope. AT&T's average P over the last 5 years is a solid 8.16. Looking ahead, the projected P ratio stands at an enticing 5.97, hinting at optimism for growth. Unfortunately, we don't have the PG ratio available either because EPS growth in the next 5 years is expected to be negative. But don't be discouraged, we have lots of other interesting data at your disposal. AT&T's return on equity might be doing the limbo at minus 8.50%, but let's not forget about return on assets, hanging on at 2.20%. These numbers shed light on how effectively the company is using its equity and assets to generate profits. There's room for improvement here, but it's a complex picture. Peak boo, negative EPS. AT&T's current EPS is minus 1.30, and brace yourselves, because the next 5 years don't promise much sunshine with an anticipated EPS decline of minus 0.51%. Time to chat about dividends. The dividend yield is ahead, turning 7.54%, but the past decade's dividend growth rate of minus 1.95% raises eyebrows. Hold on to your hats because the current payout ratio is a jaw-dropping minus 92%. That's definitely an outlier. The operating margin, while not soaring, isn't plummeting either, sitting at minus 2.20%. The profit margin, however, is taking a nap at minus 7.40%. Think of it as a company's secret formula for transforming investments into profits. Once upon a time, AT&T's revenue and earnings were on a royal road to success, until they took a detour in 2019. The aftermath? A downward spiral that's left both in the red. This financial turbulence has shaken up the market price as well. It scaled the heights until mid-2019, only to nosedive, hitting a 20-year low. Talk about a dramatic plot twist. AT&T's debt-to-equity ratio is spiking at 1.41, raising concerns about its debt load. But hey, the long-term debt-to-equity ratio is slightly tamer at 1.26. As for market sentiment, the average price return over the last 52 weeks is a gloomy minus 17.14%, reflecting the prevailing uncertainty. Gaze into the crystal ball of analysts' predictions. They foresee a price of $19.40 in the next year, a whopping 31.7% potential upside from today's $14.73. Hold on to your optimism hats, because I've got a prediction too. My analysis suggests that AT&T's fair value could reach $28.79. That's a promising twist in this tale, hinting at potential undervaluation. But this high value is due to the fact that the price according to the free cash flow discount model is very high, and we do not have the estimation according to other models available. That is why I think that a value between $17 and $18 is much more appropriate for a company like AT&T. Ladies and gentlemen, as we close the chapter on AT&T's financial story, it's clear that this company has weathered its fair share of storms. A tale of soaring heights followed by unexpected lows. It's a saga that reminds us that the world of finance is a roller coaster of unpredictability. Remember, always do your due diligence and consult professionals before making any financial decisions. If you enjoyed this video, don't forget to like and subscribe for more enlightening content. Thanks for joining us on this thrilling exploration, and until next time, keep crunching those numbers.